Hello everyone, welcome back to Familiar with FEMA series by Vinod, Kothari and Company. I am Prapti Kanakia, and in this video we'll be discussing about external commercial borrowings, that is how to raise loans from a foreign investor in the form of debt. In this video we'll be also discussing who is eligible to raise such loans, from whom can such loans be raised, what should be the end use or the end purpose of such loans, for what should be the tenure of such loans, etc. So let's begin. I'll just share my screen. So we all know in FEMA, there are two types of transactions, capital account transaction and current account transaction. Any transaction that alters the assets or liabilities of a person resident in India is a capital account transaction. In case of ECB, the liability of a person resident in India increases and therefore it is a capital account transaction. FEMA has granted powers to RBI to frame regulations in relation to any capital account transaction that involves debt instruments. And therefore, pursuant to this power, RBI has framed FEMA guarantees regulations, FEMA borrowing and lending regulations, and a master direction on external commercial borrowings, trade credits, and structured obligation. So when a borrower is issued, or when any borrower is raising any ECB, the borrower will be required to comply with FEMA and the master directions on ECB, trade credits, and structured obligations. So let's first understand in which form can the ECB be raised, as the eligibility of a borrower depends on what kind of ECB is the borrower intending to raise. So there are two kinds of ECB, INR denominated and foreign currency denominated. In INR denominated ECB, the amount is raised in the form of Indian rupees, whereas in case of foreign currency, the amount is raised in foreign currency. In INR denominated ECB, the borrower is not exposed to any foreign currency fluctuation risk. It is the lender who is exposed to the foreign currency fluctuation risk, because in INR denominated, the borrower is raising, let's say, 100 crore in rupee form. So at the time of repayment also, the borrower will pay 100 crore rupees only. He will not have to look at what is the exchange rate for rupee. It is the lender who will be exposed to this the foreign currency fluctuation risk. Whereas in case of foreign currency denominated ECB, it is the borrower who will be exposed to the foreign currency risk rather than the lender. So these are the two kinds of ECB. Further, there are 8 methods through which the ECB can be raised. First is loan, which is like a bank loan. Then fixed or floating rate notes or bonds or debentures. Here, the instrument should be fully and compulsorily convertible instrument into equity. Any optionally or partially convertible instrument will not be governed under ECB norms. Trade credits beyond 3 years. So where importer, being a person resident in India, is importing any goods from a foreign jurisdiction, so the supplier based in foreign jurisdiction might give credit to the importer that the payment may be made after 3 years or at whatever point of time as mutually decided. So if the credit period of the payment exceeds 3 years, it shall be governed under ECB framework. This arrangement is known as supplier's credit. Sometimes there can also be cases where supplier asks for instant payment. In that case, the buyer might opt for a loan from a foreign jurisdiction, bank, or a financial institution. In that case, the payment will be made to the supplier instantly and the loan amount will be repaid by the buyer to the foreign bank or financial institution as per the loan agreement. So here, if this arrangement is known as buyer's credit. Here also, if the tenure exceeds 3 years, then the same will be governed under ECB framework. Then comes foreign currency convertible bonds. Here, the bonds are raised in the form of foreign currency, and at the time of conversion, it will be converted into the equity of borrowing entity. In foreign currency exchangeable bonds, the concept is very similar to FCCBs. However, the only difference is at the time of conversion, the equity of another entity, which is called offered entity. The equity of offered entity will be offered to the lender and not of the borrowing entity. Then financial lease. Ideally, in lease, there are two parties, lessor and lessee. lessor gives the assets to the lessee for usage, and in return, the lessee pays lease rentals to the lessor. In financial lease, there is one more party to it known as financier, or which is ideally the NBFC or a bank, and the bank or NBFC obtains the ownership of the asset and makes instant payment to the lessor. The lessee will be paying lease rentals to the financiers here instead of the lessor. So this arrangement is known as financial lease. In the given case, if the financier is based in foreign jurisdiction, then the same will be considered as one of the form of raising ECB and therefore should be compliant with the ECB norms. Then comes plain vanilla rupee denominated bonds, which is also known as masala bonds, and issuance of preference shares, which are fully and compulsorily convertible into equity. So these are the 8 ways through which ECB can be raised, out of which 6 ways are available for both INR and foreign currency denominated ECB. The last 2 modes are available only in case of INR denominated ECB. Now let's understand who can raise the ECB. The eligibility is same for INR and foreign currency denominated ECB. For INR, there are certain additional borrowers who are allowed to raise ECB. We will be discussing the same in the slide. So a borrower intending to raise foreign currency denominated ECB should be working in the sector which is allowed to raise foreign direct investment. So to identify whether the sector is allowed to raise ECB, whether sector is allowed to raise FDI or not, we need to look at the FEMA non-debt instrument rules 2019 and master directions on foreign investment in India. So as per the FDI norms, there are certain sectors which is prohibited from receiving any foreign direct investment. These are lottery business, gambling business, cheat funds, nidhi companies, etc. So if the borrower is operating in any of these specified prohibited sector, in that case, the borrower will not be eligible to raise any FDI or loan in the form of ECB. Further, port trust units in CES, that is Special Economic Zone, SIDBI and Exim Bank of India is also eligible to raise foreign currency denominated ECB. Here, in case of INR denominated ECB, all the entities that are eligible to receive foreign currency denominated ECB are eligible to raise INR denominated ECB. Additionally, the entities which are engaged in microfinance activities, which are established in the form of not-for-profit organization, registered society, trust, cooperatives, non-government organizations, are allowed to raise ECB in the form of rupee denominated ECB. Now, let's understand from whom can the ECB be raised, that is, who is the recognized lender. So the lender should be a resident of FATF or IOSCO compliant country. FATF is the Financial Assistance Task Force and IOSCO is International Organization of Securities Commission. So in the countries which are complying with the standards set by FATF and IOSCO are listed on their website. So the borrower will need to see whether the lender is a resident of these country or not. If yes, then the loan from them can be raised. Further, borrower can also raise loan from multilateral or regional financial institutions like Asian Development Bank, International Monetary Fund, etc. The foreign branches or subsidiaries of Indian banks which are situated overseas can also grant loan to Indian resident. However, the borrower here, that is Indian resident, can raise only foreign currency denominated ECB from foreign branches or subsidiaries of Indian banks. Also, in case of foreign currency denominated ECB, foreign currency convertible bonds and foreign currency exchangeable bonds are not allowed to be raised. Further, the foreign branches and subsidiaries can grant loans for only certain particular end-use requirements, which we'll be discussing later. The ECB norms also allows foreign branches or subsidiaries of Indian banks to act as an arranger, underwriter, or market maker or trader for rupee-denominated bonds issued overseas. However, here the issuer should not be an Indian bank, as the foreign branches or subsidiaries are not allowed to act as an underwriter for any issuances by Indian banks. Further, the borrower can also raise money from its foreign equity holder, who, in case of the foreign equity holder is holding directly in the equity capital of the borrowing entity at least 25%. In case there is a equity shareholder who is indirectly holding in the borrowing entity, in that case, the foreign equity holder must be holding at least 51% to be eligible to give loans to the borrowing entity. Further, group company which is situated in overseas jurisdiction and has common parent as the borrowing entity, such group company can also grant loan to the Indian subsidiary or Indian companies. Then let's understand the end use requirements of ECB. So the master direction on ECB contains certain requirements as to the end use of the funds that is being raised through ECB. So the funds can be raised for any purpose other than real estate activities, investment in capital markets, or equity investments. Further, the loan can also not be raised for working capital purpose or general corporate purpose or repayment of rupee loan, except in the case if they are complying with the MAMP conditions. In that case, the loans for the raising of loans for such purposes is allowed. Also, the business of NBFC is to grant loans to the borrowers, which is an investment for the NBFC. So NBFCs usually raise loans from foreign investor and they further on lend this money to the borrowers in India. In that case, the NBFC should ensure that the end use of the borrowers to which it will be granting loan should not fall under the end use or the negative list that is prescribed in the ECB norms. That means the NBFC, if it has raised ECB, cannot grant loans which will be utilized in real estate activities, investment in capital market, equity investment, etc. Now, let's understand what should be the minimum tenure of raising such ECBs. So the average minimum tenure that is allowed under ECB framework is minimum 3 years. That is, the loan tenure should be minimum 3 years. Further, if you are raising for certain specific end use requirements, then there is specific MAMP provided in the regulations. So if a manufacturing entity is raising loan for up to $50 million in a financial year, in that case, the MAMP will be 1 year. If the ECB is raised from foreign equity holder of the borrowing entity itself, then the same is used for working capital purpose, general corporate purpose, or for repayment of rupee loan. In that case, the MAMP will be 5 years. However, if you are raising loan for the said purpose only, but from any other recognized lender, in that case, the MAMP will be either 10 years or 7 years. 7 year is available where the borrowing entity has raised ECB for repaying of rupee loans, which was availed domestically for capital expenditure. And also, if NBFC is lending the funds, in that case, the NBFC will see what is the end use of the borrower to whom the funds are being lent. In that case, if the end use of the borrower is, let's say, working capital or general corporate purpose, then the NBFCs, the loans raised by way of ECB by NBFCs will also be 10 years. Therefore, in case of NBFCs, we need to look to whom is the NBFC granting such loan? What is the end use of the borrowers to whom the loans are being granted, and not at the end use of the NBFC itself. Also, maybe to reduce the tenure requirement under ECB requirement, the lender or borrower might enter into an agreement where call option and put option is provided, which might reduce the MAMP as prescribed under the ECB directions. Let's understand this through an example. So if the MAMP requirement for any loan raised is at 3 years, in that case, the borrower might put a call or a put option that the loan will be the call and put option can be exercised within 1 year of raising of loan. And if the call or put option is exercised within 1 year, then the loan will be repaid, which will reduce the MAMP conditions. So here the MAMP criteria will not be complied with. And in that case, RBI has completely restricted that any call or put option should be in compliance with the MAMP requirement. So in case the loan is raised with 3 years of MAMP, the call and put option can be exercised only after the completion of 3 years of MAMP. Also, further, the ECB cannot be raised from a foreign branch or a subsidiary of an Indian bank for working capital purpose or general corporate purpose or for repayment of rupee loans. Now, let's understand what is the difference between tenure and minimum average maturity period. In case of tenure, let's understand this by way of an example. The borrower is raising a loan for $2 million from a lender. Lender, let's say, paid on 1st of January 2023, and within 3 years, the borrower will be repaying the amount. So the borrower will be repaying it in bullet repayment. So the repayment will be done on 1st of January 2026. So here the loan tenure is 3 years and the MAMP will also be 3 years. But in case if the loan is received in parts or in tranches and the repayment is also done in tranches, in that case the tenure and the MAMP will differ. Let's understand this through an example. Here, borrower has obtained loan of $2 million. This is the date of drawal or the date of making repayment. This is the amount that is raised in tranches and this is the amount that is repaid. So here, borrower received 0.75 million on 1st of May. Therefore, he had 0.75 million as on 1st of May. On 1st of June, he further raised $0.5 million and therefore, as on 1st of June, he had $1.25 million. So here, borrower had 0.75 million for 30 days, that is from 1st May to 1st June. And the borrower had further $1.25 million from 1st of June to 1st of September, which is 90 days. So this is the number of days for which the amount was available with the borrower. This is the average amount. This is the multiplication of balance available and the number of days for which the amount was available with the borrower. So when we add up this average, we get total number of days for which the loan amount was available with the borrower. So to get average, we'll divide this number of days by the amount of loan. That is 2353 number of days divided by 2 million. And we'll get 1176.5 number of days. So we had $2 million for 1176.5 number of days, which if we convert into number of years will amount to 3.26 years. And therefore here you can see that the loan was obtained on 1st of May and the repayment was done on 30th of June 2023. So the loan tenure is of more than 5 years. However, the MAMP comes to 3.26 only. So at the time of raising of loan and where the payments is not a bullet repayment, in that case, the borrower should ensure that he is complying with the MAMP requirements as prescribed in the master direction. Also, there are certain other requirements like complying with the hedging provisions, parking of funds, or filing forms with the RBI, etc., which should also be complied with while raising ECB. We'll be understanding all the further compliance requirements in the next video. If you have any queries, you may mention the same in the comment section below. Further, you may also refer our articles on FEMA and ECB on our website, that is vinodkothari.com. Thank you.